Welcome to Losers Become Winners for August 12th with the Alphas going to 7 points. They had 4 wins. Exit today with Bank of America leading at 62%. Let's go look at those charts. There it is. Bank of America out at 309. We got in at 109, 190. So let's do the numbers. Let's get our trusty calculator and prove out the numbers. 309. Remember, it's 100 shares per contract minus the 190 that we paid for 119 return right there. Divide that by the 190 that we paid for as a percentage, and we get, voila, 62.6%. 62.6% in 21 days, and it was 119, 5 contracts. Right there is 5 contracts at $5.95 minus $7 in roundup and fees for a net of $5.88 for the trade, working on 23.74 owed, coming out with a new owed of 17.86. Well done, Bank of America. But let's not consider the other 4 exits we have here. American Express, and there it is. And let's zoom in a little closer, and there we are. Last bar low was right there. American Express owed 17.58. It got out at 43% in 6 days. 375 one contract, 375 $2 in roundup and fees, 373 for the trade, 17.58 for the carry owed, coming down to a new owed of 13.85. Well done, American Express. But let's not forget the last 2 here in the game. Also, the winners crossing into the winner's circle also is CBS. Now remember, we are in the alphas. The alphas is the 30-day moving average strategy. To close below the 30-day moving average is the exit, or 30 ROI for the take profit. So here we are with CBS. CBS had 1 contract. They got out of $57, $2 for roundup and fees, $55 take home, $26.27 for the owed, dropping it to $25.72. Well done, CBS. Keep at it. We got a big rock to break there. Concluding now with Raytheon. Here is Raytheon's numbers. Raytheon was last bar low here. It earned it. Now I'm also putting in now the date, the qualifying date right there. So this qualified at 36% for last bar low on 8/11. And then last bar low was set at 64.07 for the exit, and we got out with $103 profit. 2 contracts, 206 minus roundup and fees and $3, coming out to 203 with a 287. And look at this, we're now only 184 owed for Raytheon. Kind of cool, huh? All right. So let me run something by you also very quickly why I prefer options. If we had done this trade as an equity, we would have gone in at 61.40 and got out of 64.07. So 64.07 would have been the exit. The entrance would have been a 61.4. That's a $2.67 earned over 61.4 paid as a percentage return. 4% return, 4.3% return for this movement in equities. And look at our move, 30% return in 3 days for the same space. And the cost was a lot cheaper too. Remember that 100 shares on buying this would cost you 0.40. It would have cost you 6,140 for the 100 shares. Our contract only cost us $340. That is the power of options. All right, lesson over. Let's move on. We got now XLV here, and XLV is now the next leader for the alphas, and they are in position for a possible maybe adding another point for the alphas. They're at 16%. We have very good indicators for the upside. And there's our warning track. And we reached that 30% ROI on a close. We will be able to go to last bar low and also take an exit to get another point. The others are in negative territory, and they are not anywhere near the warning track for an exit, nor are they anywhere near their 30 ROI for an exit on the profit side. That said, that takes us now over to the Tigers. Now remember, the Tigers are trading the price channel. TTL, TLT joined today. XLF is their leader at 17%. 17% for XLF. And here it is. Now, note this is a price channel. We are doing price channel. This is what the challenge is about. Which of the two is better? So we are in profit zone here. And our closest exit of the profit zone rules for the price channel is the 30-day moving average, the black price channel, or a dipper. But the dipper is way down here. So this is the closest to the money. And there is no change. Now, coming over to the next leader is Verizon. Here I'll be able to show you one of the rare, not rare, but occasional exit rules that comes up, and that is the dipper. Yes, buy the dip. You hear it all the time for day traders, and we are using it here as a minor support to protect profit. Remember the rules: protect capital, protect profit, take profit. So here we are going, and we are here. We are not in 30%. You can see we're at 6%, but we had a dip. And that dip qualifies to move the exit to 58.24. And that's what we put here. Remember, this is the qualifier. This is when it qualified us for last bar low or the profit. No, not past bar low, for the profit zone. That's what that PZ stands for. 8/12 is today's date. And today's date was dip exit qualified at 58.24. And now the other guys down below are running below, and they're running in their they are in standard exit mode, which is way down here at the green price channel. So these three here are stuck at the green price channel in their respectability. So that is the conclusion of today's winners become losers for August 12th, with 4 wins for the Alphas, going 7, Tigers 4. And we'll catch you tomorrow with the latest happening in the battle of the strategies. Thank you. Bye-bye.